When talking about the future of money and sort of what lays ahead in terms of financial ecosystems, one concept that comes out is that everything will be tokenized. And that's a pretty broad category, everything. But one particularly interesting sector that will absolutely fall under this tokenization is real estate. So in this video, we're going to break down what is tokenized real estate, how is it going to affect kind of the markets in terms of buying and selling and investing, and what are some sort of considerations that we all want to be aware of. Hey, welcome to the show. This is Molly Elmore. I am your hostess, and today we're going to talk about the tokenization of real estate. So this is a neat idea, and it is one of the areas of innovation that the blockchain will absolutely make things more efficient, less costly, and kind of reduce what we call friction. I'm pretty excited. I think that it's a massive concept to think about the entire real estate market, which globally is huge. I mean, think about how many homes, office buildings, hotels, resorts, all property that is owned. Right now, it's the data and the information and the contracts, which we can refer to as deeds and titles. Those are scattered. Some of them are with local governments, some of them people own. I'm sure in some more primitive places there is very little record. It's just sort of like word of mouth. So if you tackle this idea of everything being tokenized, including all of the real estate in the world, that's a big undertaking. So we're kind of going to tackle it conceptually, but just know that this will probably be an evolution that takes possibly decades. So the first thing is this idea of tokenization. So that's a marketing jargon, techie jargon word that simply means that an asset that you own in the physical world, the real world, would be represented in a database that we refer to as the blockchain. So if you own a home, that's an asset. Right now you have a deed and a title that sort of give legal clarification to your ownership of it. Well, you could lose that paper, and let's say the government lost their copy of it. Tokenization would essentially make another copy of those documents exist on the blockchain. If you're not familiar with sort of what that means conceptually, it's essentially like a database that many, many people have copies of, that there's a specific process for updating the transactions on that database. It's not too different than sort of a database that lives in the cloud. All right, so if we have these assets like homes, offices, etc., where the documents that relate to it are now stored in the blockchain, essentially your confirmation of ownership lives on the blockchain. So the house obviously doesn't. It's a database, but the record that you own this property is now confirmed in the blockchain, and you have these things called private keys, access keys, that give you the ability to give that ownership to somebody else. So this opens up this whole new opportunity for real estate to be bought and sold, kind of like how you buy and sell a stock, where you don't necessarily have to have physical custody of the stock's certificates. In many cases, like I have stocks with E-Trade, I never get the actual paperwork that are like the official stock certificates. E-Trade takes care of that custody, but when I go and buy, or if I go to sell it to somebody else, then that custody would be transferred to whomever the new owner's sort of custodian is. So with real estate, it's a little bit different because you generally live in the house or go there, but the ownership was kind of represented in the same way that a tokenized stock would be. Or if you own something like Bitcoin or XRP, you own an asset that's tokenized, and your ownership of that is represented in the blockchain. Real estate would be done the same thing. So this way, like if you wanted to buy real estate in a faraway place, you don't even have to necessarily go there. This idea of having closing attorneys and having to meet in person at a closing, or if not, to send like a proxy or to have these sort of notarized documents, that might all go away. If I'm able to transfer ownership of a tokenized asset, which in this case would be real estate, via a blockchain-based transaction, it kind of could change how those sales happen, meaning you don't have to necessarily go there anymore. The more interesting side of this, in my opinion, actually, is that it's going to change what's referred to as fractionalized ownership. So think about a company. Like if you were, let's say you started a company tomorrow and you got approval to go public and you did an IPO, you would essentially issue a whole bunch of shares of your company. So a whole bunch of people could become owners. It would be a fractionalized ownership. Various people would own a fraction of the company. And we don't really have that with real estate. I mean, you could, in theory, like I bet you if you built a hotel, I'm not really in real estate, so I'm speculating here. But if you built a hotel and you had a bunch of investors, they all have a stake in it. I mean, that's fractionalized ownership in a capacity. It's just sort of done via kind of a corporate structure where you have paperwork and attorneys, and to buy and sell out of that is sort of a more complicated process. So we're sort of merging the idea of like online stock trading or even trading of digital assets like cryptocurrencies with this world of real estate and saying, you know what, we're now going to take real estate properties, which don't have to be a giant hotel. They could be just a home or a commercial building, a restaurant or something. And we're going to now fractionalize that ownership and we're going to tokenize it. So now each share of, let's say it's a restaurant, each share of this restaurant is now represented on the blockchain, and a finite number of these sort of shares have been issued. And then people can buy and sell them like you could buy and sell shares of a stock. So the neat thing is that if you are maybe a lower net worth individual and you wanted to get into real estate, but you don't have the money to buy a whole restaurant or buy a whole apartment building or buy a whole home even, you could now purchase a smaller percentage, a fraction of it. So that's kind of neat. And even if you are high net worth and you do real estate investing, you might not always want to be the only owner or own all of something. You could now own a percentage, a fraction of it, and be able to buy and sell in a different way. There's also sort of this neat idea that if let's say I owned an office building and that tied up a whole lot of my money to buy it, and I needed to raise money for something else, right now I could take out another loan, kind of like sort of what's referred to as like a second mortgage, or I could sell the whole thing. Right now, it's not very common where I could just sell part of it. So if the ownership, though, of my restaurant building was fractionalized, I could sell shares to raise money for something else and just sort of bring in these new owners, as shareholders. So it kind of just changes the way that real estate transactions could be structured, and that the transactions could be done fairly easily with sort of a smart contract type of logic where portions are sold if certain conditions are met. If you watched my another video that I did, I'll put it in the description, where we talked about counterparty risk. That is another thing that's really valuable with this sort of blockchain-based currency system. Is that right now, if I were to go to buy a house, I have to sort of sign a contract and you stop showing it to other people. It kind of comes off the market. There's this sort of waiting period where one party is kind of waiting for the other party to do their thing. You have to trust that if I say I'm going to do something, that I'm going to do it. That's why we have these legally binding contracts during these sort of periods of due diligence and sort of waiting for things in real estate. Well, the smart contract capability removes that counterparty risk, and that you can essentially have this computer program confirm that, yep, the buyer has the money. We're checking their wallet, and the seller has the ability to sell this. This is in fact their property. There's no liens on it or other type of legal restrictions. We've confirmed that all the conditions are met. Boom, transaction runs when those conditions are satisfied. So it removes the risk that one side generally has to take in a transaction. And with this sort of tokenized stuff, where you in the sort of current world where you have to wait for settlement, meaning like even if I agreed to buy a house, the money's not going to be in your bank account immediately. Even if I have the money, it's in my bank. My bank has to send it to your bank, and that generally takes minimum a couple of days. So to remove this counterparty risk by using the blockchain to transfer these digital assets, it leaves fewer people sort of in a tough position if the transaction doesn't go through, or other types of kind of frustrations that result when you have to wait several days for these things to clear and settle. So this tokenization will almost treat real estate, at least the fractionalized part, kind of like it would sort of stock trading, where you could kind of be in and out of an investment fairly quickly if you wanted to, but you wouldn't necessarily have to do that. It's just now there's the technical capability for that to happen. And there's also a neat idea with crowdfunding where, let's say you and your 100 closest friends decide you want to build an all-inclusive luxury resort somewhere. None of you really have all the money. Right now, the economy or the sort of market would dictate that you have to take out a loan. And generally, one person would probably sign for this loan unless you have a company to sign for it. What if you did a different model where you all kind of chipped in via sort of a crowdfunding capacity, and the ownership of this ultra cool luxury resort was now fractionalized, and you each owned, a percentage of it. And let's say there was decisions that had to be made. You could use a DAO structure where there's blockchain voting. So if important stuff comes up, you now have a mechanism in place for all the members to vote from wherever they are. You don't have to necessarily be there in person. And when the ultra luxury resort starts making all sorts of money, you have a mechanism to profit share or release funds, whatever you want to call them, to people's wallets that are associated with this. So there's just a lot of cool automation that would come from this fractionalized concept relating to real estate. And it's a big change because the real estate industry, kind of like correspondent banking and and supply chain, kind of runs using very old school paperwork. Now I think that industry has moved on to things like DocuSign for electronic approvals of things, but the ownership and the transaction side of it is still done kind of in the old school way. I think it's going to take a while, this is my opinion, for the entire real estate industry to move to the blockchain. I would expect certain more advanced countries to move first, but even in an advanced country, generally not everywhere is technologically advanced. So it might take quite a bit of time. I would expect some more urban markets, maybe in the US, like San Francisco and New York, to kind of embrace this idea first, because some of the tech companies that are focused on tokenized real estate tend to be based there. I also have seen more kind of buzz about this in some European cities like London, for example. So I think we'll get to watch how they handle some of the hiccups that'll always come when embracing new technology. But I think it's going to change how real estate is invested in, and that you generally have kind of an all or nothing thing for the most part, where you have to buy a building or not. Now you can sort of buy shares of things. You can split the risk of owning with other groups of people. You also can participate in much larger ventures than you might otherwise be able to. It also might help some ventures avoid the debt model, where you could now fund things from assets and wealth that you have, versus having to always have everything be based on loans and financing. So that's just sort of another way to make projects a little bit more profitable. It also helps with the counterparty risk side of real estate, and some of the sort of annoying paperwork that right now, in a transaction, you have to pay administrative help to do like a title search, and to pay for title insurance and administrative people to sort of take care of all the paperwork. And if you've ever bought homes, like there's a lot of paperwork sometimes. So for that, all of it to be done in a more automated manner with the blockchain is pretty cool. So I think this is going to be a neat area of innovation for real estate. There are several blockchains, I think, that have businesses using their tech. I know that there's some on the XRP Ledger. I know there's some on Solana, and some on the Ethereum blockchain. So I don't think this is specific to any one particular project. It just would need to be one that would likely support smart contracts and inexpensive, fast transactions. I think it will be a while before the world is tokenized in real estate. simply due to the sheer volume of homes and buildings and resorts and hotels around the globe. Uh, while I'm tempted to think that maybe this is like a flip the switch where everything happens at once, but I don't think that's even remotely possible here, because all of the old deeds and titles would need to be kind of added to the blockchain. That's that tokenization process. And that is just a tremendous amount of work, especially in a big market like a city. I mean, think about how many individual property owners there are in like New York City. It's a lot. So I think there'll be some neat projects to invest in. Now, unfortunately, this is sort of the drag. And some of the companies, when you read their marketing, they sort of pitch that this is a very inclusive type of thing. Financial inclusion is something the crypto market loves to talk about, which generally is interpreted to mean that people who are excluded currently would now be included. And they're financially excluded generally because they don't have as much money or means as someone else. But in the United States, you're going to have to be an accredited investor to participate in this, as far as I know. These definitely fall into the classification of securities, where you're buying something with the expectation of a return. There's absolutely an investment contract, the same way that when you buy property. But what's interesting to me is that I can go and buy a house. This is where it may change. Like, I can go buy a house and I don't have to be an accredited investor. But if I want to buy a hundredth of a house, I have to be an accredited investor. So it's maybe it's because you're depending on the work product of someone else. When I buy a hundredth of a house, it's not all on me. So I am investing in sort of a shared effort. So that would be my interpretation about why that is the case. So I don't know how inclusive it's going to be in the United States for the foreseeable future, but people in other nations might be able to enjoy this opportunity if you don't have accredited investor status at this point. So, all right, if you enjoyed this video, please like it. It helps me with YouTube. Subscribe to the channel for more videos, and I will see you in the next one. Bye.